Thank you. Good to see you once again. I hope you're enjoying the day. We had two remarkable sessions since morning, specifically about the discussions apart from the knowledge sessions that we have. And we can see the stellar panel again here. We are going to discuss about various aspects of the technology again. We discuss about the digital transformation in the morning, and here we are going to be very specific in terms of how the banking as a service model will evolve and how the banks are actually getting ready for it. So the idea came to my mind because everybody is talking in the colloquial words these days. Not just FOMO, but SaaS model, BaaS model, and that's what we thought, that whether the banks are actually how aggressively they are going in this format. So when we specifically speak about banking as a service, my first question is BaaS the next step for digital transformation for the banks? And why this question is because we have been learning a lot in terms of the collaborations and the partnerships which the fintechs have with the banks or the banks have with other financial institutions, and what is going to be next roadmap. Sometimes, in fact, there is an also argument that whether the bank will exist or not tomorrow and whether the fintech will take over. Considering all this background, so the question comes is BaaS, banking as a service, the next step of digital transformation for the banks? And I will start with you, Mr. Sharma.
So I would say depends, because not every bank is in the same space about how we look at the future and our strategy. So while BaaS is spoken in one single word, I would say there are three layers to it. The technology part of how do we integrate, handshake, be part of the ecosystem, connect to create more value. Answer is yes, we need that technology capability. The question is, are you just going to make this in your front office available to anyone and everyone to just come, connect, integrate? Depending on, some banks may play more of a balance sheet play. Some of them may choose to be more fintech friendly banks. Some banks like us, we think we are fintech ourselves. And thereby, depending on what is that end goal or strategy that you pursue, we decide how these capabilities would be rendered, either to in-source some of the partnership opportunities while exposing certain APIs and handshake capability externally. But most important, I think, between the strategy and technology, we forget is the emanating and underlying risk that is associated when we make this available. And in current context, I think when the data privacy guidelines, the security, the risk is becoming all more pervasive, I think it's extremely important for all financial institutions, and they are re-looking at BaaS as a strategy to say how much you want to open up and what is the value you get for that.
Noted your points, Mr. Sharma. Mr. Pandey, Mr. Mehta was here from the IBA, again a veteran banker, and he says that PSU banks are also far more aggressive in adopting digital. I mean, again, digital is a synonym today. Everybody is very aggressive in that front. So considering that background where we understand that PSBs are also very aggressive, do you see the BaaS as the next digital transformation model?
See, one thing is very clear. I fully agree, with my Shamaji from Kotak Bank, that technology is going to play a huge role, number one. Number two, digital. Now you say technology or you say digital or you say one by one any name, but everything is same, one and the same. Without that, now nothing is possible, first of all. So whether public sector, whether private sector, it has to be going to be order of the day. You need to see on the products, both asset and liabilities, if per se banking. The second is on the service side, because the two major issues, which is the customer service and customer attrition. Because onboarding a customer, I believe, is a very big cost in the banking or maybe the BFSI. So what happens that customer loyalty is going to play a very big role. Now being those case, and what he underlined is, underlying risk. So there are three important factors. I would take it P, P, T and C, 4, which is the process, people, process, technology and the compliance. This 4 process, if you are taking as a fintech, now he said do or deploy, whether you are going to do it on yourself or whether you are going to take it forward with a partnership in a fintech. So who is the people around? Long-term partnership. what technology it is, whether it is in your control, not in your control, or where it is actually fully secured on the DLP issue and other things, on the regulatory issues, what Mr. Mehta has also said. The second is the process. So whether the bankers, because as per the Reserve Bank guidelines, the customer is in your books. So whether the process is in your control. And the third is, the most importantly, entire PPT, whether there is a compliance attached to it. So I believe with these three, whether public sector or the private or any NBFC, the order of the day is going digital. We have to be there in that line. There is no exception to it, sir.
Right, sure. Neil, you represent a foreign bank. What is your view here?
My view in terms of
Digital transformation is the next step for the BaaS.
I would have a two sides of the view on this one. So firstly, is BaaS the only model out there? I would come in and quote 2-3 more. So one is on a purely digital side, you have something as close as open banking, which is the first layer of BaaS. Then you have a BaaS, and you have a marketplace or ecosystem, right? So those are the three models which are already there if you are playing on a digital first medium. Now, when you start looking at an omni-channel / multi-channel, because let's remember, banks started off with a single channel and a ledger as a product. And from there, we've gone into multi-channel, multi-product. So when we start talking about digital transformation, we will have to converge to a certain extent into, a digital as a play, because it is garnering a lot of support. So from that perspective, I would say these are the three models which are most promising. Marketplace is something which we've seen becoming very popular in the Oriental, for example, in super apps and all of that in China. Banking as a service seems to have a lot of play here in India as one of the models. And open banking seems to be something which is very popular amongst the European side. So we are seeing these three models. I guess we'll need to give it a little bit more time to figure out where it lands, but these are definitely promising.
Sure, Neil. Rajesh, let me come to you and take your view.
Thank you. I moved from Europe last year to join CSB Bank, and since I've come, of course, I'm drawing comparisons, what I was seeing in Europe and what I see here in India. So I think we have done quite a lot of work in the payment space, for example, and I can say that we are far ahead compared to the European market. But I think some of these things like BaaS, for example, which is the topic here, I think Europe has already done quite a lot of work over the last 5 years or so. Many of the banks are already collaborating with those. They are defined BaaS companies over there in many of the markets in Europe, and banks are engaging and partnering with them to open new sources of revenue or to provide some services which customers have not touched. So you'll appreciate that as banks grow, their ability to innovate and to provide new differentiated services start diluting a little bit because of the sheer scale. While some of these fintech, neobanks or BaaS kind of companies, they come with that proposition and you can leverage it very quickly. The speed to market is pretty high. So I think we can obviously and we should adopt wherever it exists to provide better services to the customer or to open new revenue sources for the bank. So I think we have a significant play here in India.
Sure. So, Ranish, you heard the view from the bankers or the financial institution side. You will have a different observations because you must be talking to all of them. So, what is your sense? Do you see the bankers are heading towards BaaS model?
So, Amol, let me give you some perspective. This model anyways was Hello, yeah. So this model was anyways existing. Let's go back maybe 30, 40 years before. There used to be one person, now you can call him as a brand. That person used to come to your home, used to guide your father, mother,
about maybe recurring deposits, maybe an insurance policy, maybe some investments that has to be done. Now this particular concept now has come as a digital real-time applications for the consumer. So what banks are now looking at is moving from a transaction oriented or transaction focused to maybe a consumer requirements focus kind of environment. Now for that, possibly all the banks may move to this kind of a model and they will have better reach to the consumers. The basic block remains the same, that how ready they are in terms of infrastructure. When I say infrastructure, not only the hardware per se or maybe the application, but in an integrated way as to how much they can open up to the world, open up to the different organization which is catering as a single point of contact for the customers of their own. So it's a start. Many banks have already started in India. Many organizations has already started with conversing this particular proposition and taking it to the customers. It is going to take a long way, but it is definitely a future which is very promising.
Okay, sure, Ranish. I think so. Mr. Sharma, let me come to you again. Like Ranish said, it's a very promising thing, and that's where the future lies. Now, let's get into a little specific and elaborate more here in terms of what kinds of difference banking as a service model will make in the whole banking world. And is it going to be the best collaboration model between fintechs, digital banks, finance companies? How do you think it will shape up?
So I'll continue from where I left. Okay. See, banks have to be very clear when you build BaaS, are you just going to be a utility? I would say most banks, if you ask them as a strategy, nobody will say, I want to be a utility layer. It's like the classic case today, what you see in UPI, right? All the payment and transaction experience layer has moved away from bank. Banks are just a utility, processing those transactions, building capacity, making sure that core banking and everything else stands up for all the throughput that keeps hitting the bank. Do we want more and more of such moments as a proactive strategy? I don't think anyone wants it. So coming back to the question of if you don't want to be a utility layer, then what is BaaS for? Okay, and that's why probably my views are going to be little contrary to what you would expect Amol for me to say. Okay, and I think, but this is an important thought-provoking question to all bankers and financial, and not just bankers, but even for fintechs, even for neobanks, those who want to work with bank, that you have to find a way to work with bank where you create value and you share value. You can't think of bank as a utility on which I can build my OTT models, I can build my WhatsApp moment model, and banks will be like the poor telcos carrying all the carrier, and I'll build a great value on top of it. Because while banks, and we must realize why I'm saying it, because banks bear a huge cost of risk, compliance, managing the show, which is not necessarily creating value, but that is the custodian of the trust of customers' money. I think where banks do lag, and that's why some of these discussions have happened and it has scaled up, is banks have not built a great experience layer. Okay, and banks have traditionally been slow in moving things because of the technology stack is old, most of that is vendorized, you don't have the great in-house engineering and design capability, the risk tolerance on failure is still pretty low, so you want everything to be maximum validated. You will not go and launch a product which is incomplete or probably which customers give thumbs down, and this is more to do with the cultural DNA of how banks have evolved. What banks started to think that through BaaS, I can go and solve a lot of these problems that I can't solve internally. So let me work with some fintech which will try and experiment and bring customers in, and I will see how I can create more value on top of it. Or I can do faster innovation, or I can start reducing my risk and speed to market cycles. So there are definite benefits of going there. We do it too. We have probably more than 300 such partners we have enabled. But again, the question is, where do you compete? Where do you collaborate? That has to be clear from the strategy perspective. Is the experience layer getting diluted? And if you're okay with it, maybe you can look at BaaS as end-to-end. If you think that, no, I want to still control the experience layer, the data layer, the engagement layer, then I think it's important for banks to start raising their game and have certain budgets for failure and build higher tolerance for failure within the organization.
Quite meaningful thoughts there. So, Mr. Pandey, I will try to learn from in terms of the collaborations. Most of the banks or every bank today has number of partnerships with the fintechs or even the tech companies. Considering BaaS or maybe even SaaS or the evolution of the digital, what kind of collaborations between the fintech companies and banks will be successful, will be quite meaningful according to you?
I think it is a very wonderful question. Actually, you touched a base. When you uttered a word collaboration while using the fintech. Let me tell you this, what we are talking today, fintech is also a collaboration. Now, some of the startups or the companies have come through a technology because they have a very good, the knowledge, and they have built certain infrastructure on technology, and that you are using it. What is going, maybe 1 or 2 years, you are going to say this collaboration with fintechs. But what is going to come in the banking industry is the pure collaborations. Now, what I mean to say is, here collaboration with the skills or the capacity skill set. Now, technology is the skill set, that is a fintech collaboration. So people are talking about, on the card side or the payment and settlement side, maybe on the AI ML side where you cannot build, you are having the engagement with a fintech maybe 5-10 years, and then you are building your capacities because there is a decision of do and deploy. So you are deploying ready-made and then you are going ahead. What I am saying is the skill set. Now suppose, as a bank is, can they have a branch in each of the taluka? No, it is impossible. Now second is, can through technology I reach each and everybody if I don't have a branch, say 400 kilometers away? Can I reach? In entirety, I cannot. Now the collaboration, what I am talking is, suppose there is an MFI who is technologically strong. If there is a NBFC which is very good in that area, or maybe a SHP, I am now going to a very grassroots level, because you will not going to get the loans of 200, 100 crore rupees, 500 crore rupees for 10 years down the line. So you need to, today is the era when you are going to underwrite 500 rupees loan and maybe 10,000 application in a day. So the monitoring and the other thing and the having the close connect. So it is not a totally digital, it is going to be phygital. So that connect is going to remain in the BFSI for quite some time. So we need to develop a collaboration both on the monitoring side, collection side, and also on the delivery side. This is my take.
Sure. Quite meaningful thoughts, Mr. Pandey. Neil, let me come to you and learn in terms of what kinds of services can banks allow fintech companies to put under BaaS? Will banks continue to maintain their margins also going ahead? I mean, this question I wanted to ask others also, but I will start from you. That's the second part.
Yeah, the most controversial one. A couple of things. So, let me build on a point that you started off in terms of collaboration and then delve it in here. See, when we look at a collaboration, it is never a zero-sum game. The moment you think zero-sum, it means it's over, right? So that's point number one. So if we take a step back, the entire objective why banks might pursue a BaaS strategy is that they want to grow their pie, right? Because if your pie grows, then you're getting a part of the pie and hence you are happy. But if in the process you're missing out on some of your strategic aspects, you're obviously going to bail out. And that's something which each bank has to make a decision on. Now, in terms of BaaS and banking services that can be offered, in a 3-layer model from a BaaS point of view, where the first is the bank entity which holds the license, the second is the BaaS technology provider, and the third is non-banking entity. you look at it and each of them kind of split down the work in terms of their core competence. So if you're looking at it purely as that and you have set out clear goals, saying that, listen, as a bank, I'm comfortable with you giving out certain products. Example, case in point, right? One of the best strategy which might border into the BaaS terrain is Apple credit cards, right? Apple is the tech player, Goldman Sachs is the credit card player, and you have some, that is the MasterCard story that comes along with it. So it is borderline there. Now, in terms of margins and all of it, a lot of factors will determine it, right? Each bank, like Deepak mentioned, has its own strategy, has its own aspiration. Some want to look at it in terms of saying, I want to be a super app. Because let's remember, right? The phones that we use are the most used device in the entire world. And the real estate on that is phenomenally large. Now, that is something, if they prefer it and they're able to pull it off, fantastic, right? If they're not and they feel more comfortable saying that, listen, this is the space I'm not able to address, or this is a target segment, like example, Gen Zs, I'm not able to achieve, and I'm comfortable partnering with another player, non-banking, then you can go out with it. Now, within a service, whether it is cards, lendings, BNPL, I know nobody wants to talk BNPL, but those are some of the factors which we have already seen banks, being white labeled and offering those services through a non-bank partner. So those are some of the thoughts I'll give with you. Margins, again, commercial considerations, each bank thinks of it from its own strategy point of view, and they plan from it.
Okay, sure. Rajesh, what is your view in terms of the services that banks may allow fintechs to offer under BaaS?
I think every bank will think of it very differently, Amol. So if I look at CSB Bank, so we are late entrant from the transformation journey and building the business perspective. So we are pretty open to opening all the fronts, and partnership is one of the key strategy of the bank, which is SPS 2030. So we are already speaking to various guys in fintech, neobank, digital bank, be it in the credit card space, lending space, liability space, business banking, wholesale banking, etc., etc. While some of the large banks, medium-sized banks may have a very different perspective about it, because where they are right now and how much they want to open up to some of the fintechs which are just starting the journey. I think from our perspective, we look at partnership where we want to build a very long-term partnership which is based on trust and respect for each other, and getting a true meaningful outcome both from the revenue and margins perspective for each other.
Sure, Rajesh. So, Ranish, my question is specifically about the challenges now. The bankers here already told specifically about the partnerships, the collaborative model, and which way they can go. But when they are on the journey, what could be the challenges according to you, which they face or they are facing right now? That's what I would like you to tell us. But before that, I just want to make a small announcement. After that, I will take 1 or 2 questions from the audience. So be ready. After Ranish's answer, I will come to you. If you have any specific questions related to BaaS, please be ready with that. Team, please get ready with the mic also. Ranish, please go ahead.
Yeah, so challenges would be many, but let's look at it. The first and the foremost is, how is the entire transaction or the business model can be taken care when there is no security breaches. So security is going to be the biggest problem that is going forward as things gets opened up, and all the banks are offering this as a service, and there are people who are taking those services to the customers. So that's one. Second is regulation anyways will evolve. A lot of tightening guidelines will come in. That is something which will happen. These are 2 parallel threads. The biggest problem which I feel for the brands would be a challenge per se is, how are they going to maintain the experience, since they are going to collaborate with multiple banks offering their financial products or maybe the loans, whatever the customers look forward to. How can they have a similar experience dealing with bank A and dealing with bank B? So these are a couple of things that I can think of, an outside in view from my side.
Sure. So I have still many questions left. Sure, sure.
Supplement. I think two things which you are asking.
Uh-huh.
The role which will be played maybe next 2 years. The first is the contact center is going to change like anything in the banking. And if you really want to do transactions, voice-based AI and the face match, that is video-based.
Okay.
So that is going to play a huge role in next 2 to 3 years time, where you probably allow the transactions happening maybe at the counter level or maybe at the contact center. You may see I should say, the centralized branch,
Okay.
which is making all the transaction. Second is when you are going digital, please remember, huge risk you carry, and you need to review your policies, maybe whether lending side, business rule engines, or whatsoever rule engines you have made. That is not a quarterly level or a half yearly level or year. Even you need to see by the end of the day, you need to review, because if UPI fails without debiting your CBS, the transaction has happened. Here, if it happens, it is going to risk a bank overnight.
Absolutely.
Two
Absolutely.
areas I feel is very.
Oh, thank you. Thank you for that rejoinder. Anybody has any quick question here? Yes, please. Can we have a mic there on the first table? Request you to be please very specific.
Hi, good afternoon. Chiranjeev here from CareEdge. The quick question to maybe Asheesh sir, we have already addressed a part of it. When you talk about digital and risk, they don't go hand to hand. So for a new age bank, how they're going to manage it? Because they don't have a legacy of all those data systems. How they're going to manage it? That is a quick question.
Okay. A risk. Who wants to take it? Do you want to take it?
Let me share a perspective on that. If someone else is more qualified, I'm more than happy to pass the speaker, because like you said, risk is definitely a bit of a risk. See, when you look at the fundamentals of digital banking, there are three things that you have to look at, right? The data, the security, and the service. These are three fundamentals. And now when you break it down, and if you were to use a neobank as a construct, an example I would always quote is the job of the banks is fiduciary in nature. We don't own our own money. It is the customer's money. And hence, the trust becomes pivotal, right? Any bank which has not paid heed to that fundamental paradigm has not survived, right? And hence, I would put it that way. So secondly, we are seeing a few events in the world where financial risks were not taken care of. Okay. Regulatory aspects in terms of compliance were not taken care of. And as a result, you're seeing that unwinding, and there might be a little collateral damage. Of course, the people who invested in those firms have also got impacted, right? So I would want to put it that it is pivotal, and how you manage your assets and liabilities, how you manage your financial risk, how you manage underwriting, how do you make sure that the security protocols are not compromised? Because if you are going to operate through an app, anybody around the world can reach out, hack it, get through. You are actually taking on a bigger risk. So the basic principles of banking has got to be held very, very tight.
Yeah, I can supplement two use case quickly, which probably will give you some idea. First of all, I would say it goes hand in hand, not the other way around, between digital and the risk. I'll come to that point very. See, if the first use case is, the payment and settlement, still banks are, far ahead than the, say, T+1 sort of, T+2 sort of reconciliation, internet banking or mobile banking, or the maybe n number of payment and settlement systems. Can you go with the robotic process automation 3+1, 6+1, same day? You may receive a file at 7:30 from the NPCI, but by the time you have reconciled at least 5 times within your ecosystem. So that is one thing. The second thing, when you underwrite a loan, and when you underwrite a loan, you have the entire data with you. Why I said it goes hand in hand, not other way around. Right now, I am also doing underwriting, but I don't know which my branch is doing. My CPC is doing, but I don't have centralized. But when you centralize, go digital, whether the payment and settlement, because you are doing reconciliation at the, the entire centralized back office or the underwriting, you have all the data. You are more matured to do the risk management. So I feel this with 2 use case I gave, but then it is similar to other areas of the banking where you can deploy. So I think as you go digital, you have to be more stronger on the risk management side for each of the, I think, areas where the bank is undertaking, whether the asset, liability, or maybe the services part.
Sure. Any other question that we have from the audience? We have any other question? Okay, sure. Then I will take my own questions. So obviously I have many of them, but let me shoot one important question to all of you. And I'm trying to, just play my luck here. As a journalist, we ask 3-4 questions in one go. Kahin to lottery lag jaye type. So usi tarah se my question to you, I mean all of you, and I will start with you, Mr. Sharma, is considering BaaS model is shaping up, growing up really aggressively, considering the collaborations models are going up, here is the question. Who will own the customers? Will it be a profitable model? And what's the next level of digital transformation that we can see the banks are going to go ahead with these models?
So who will own the customer? I think I would say nobody owns the customer. People think they own the customer. Customers decide every moment where and for what they want to go to. Today, classic example is you go to an e-commerce site, the e-commerce company thinks they own the customer. You make a payment and it goes through a payment gateway or an aggregator, and that aggregator thinks he owns the customer. Because the transaction came to a card issuer or a bank, which is in turn processing the payment, they think they own the customer. And then someone goes and offers a buy now, pay later or a credit as an option, and they think they own the customer. So I think everybody thinks they own the customer. So if you ask me more from experience layer, there is nothing called a customer ownership in real sense. Customers decide for what product or service, where would they go and spend that time. Regulatorily, if you ask this question, of course, since you do the KYC and compliance and manage the risk or manage the deposit, from all regulatory aspect, the understanding is clear, the regulated entity owns the customer. But when you do this whole BaaS model, obviously the ownership on paper is of a regulated entity. And that's why this becomes extremely critical. The point that I made in the beginning, the 3 different tenets of BaaS is how do you manage the whole risk part? Because tomorrow, if there is a data breach with the partner with whom you are working, or if the partner ends up storing the data that a partner is not supposed to store, or if there are any kind of security risk, compliance, service breach, who is going to be responsible? Obviously, the partners are not regulated. They don't have any ambit under which they can be held accountable. So it's back to the bank, which in turn is offering that layer. So coming back to the previous question when you were asking about financials, I don't think today there is a well-established model to say what is that cost of managing risk in this equation of BaaS. We are all talking about cost of acquisition and revenue and how we will do revenue share. But banks today have a far greater liability about, your deployment under your, what you have to do under financial inclusions, what you have to provide allocation under various categories of lending, or probably managing the risk, managing the compliance. There's a massive overhead which is all sitting at various invisible layers. The business team or the product team which looks at such partnerships very seldom looks at what are the underlying costs that you are carrying when you open this up. And I think that's why the economic model of BaaS, if you ask me, is not truly understood well across the industry. While there are multiple experiments, some at scale, some probably beginning, but it just needs to be looked at end to end if this has to really become a scalable way to work in the market.
Sure. Noted your points. Rajesh?
I think I agree with Deepak that nobody owns customers today. I think it's a notion which is bit dated. When in the previous era, banks used to have customer, and there were not enough services or platforms where those customers could go and pick those services elsewhere. I think customers move around today with ease from platform A to platform B, from bank A to bank B with ease. I think what I've seen is that banks are looking at all the places where customers exist, and they will go and work and partner with those institutions so that they can get access to those customers who are not existing with the bank today. So I don't think that the ownership of customer, that concept is really there today.
Okay. And on the profitability part or the margins?
I think why do I need to work with a fintech or neobank? So let's start from there. So one, I am looking at a service which I am not able to provide.
Right.
Yeah. So which means I don't have that revenue stream. So I don't know what margins I have. Right. So I don't have a reference point. So I can say that my margins are dripping. Yeah. Two, I am looking at a service from the differentiation perspective. I provide that service, but I'm not able to bring that extra edge what I want. Either I don't have ability or my speed to market is significantly long. So if I'm going to get some of these values from a partner, I think there has to be a cost associated with that. So you have to take a call that, are you going to pay that cost to subscribe to that incremental service or incremental value? I think it makes sense.
Sure. Ranish?
So who owns the customer? Definitely, from customer point of view, he is the customer of the entity whose customer experience that he touches with. Okay, so where he is going to interface with. So if I am transacting anything on Amazon or maybe Google Pay, I am their customer. How it happens on the back end, which all entities are getting engaged on that is actually not my prerogative. If you look at the brand point of view, customer is owned by the brand because they are taking care of the need of the customer. So definitely, I'm sorry, I'm just going a little opposite to what you said. The customer is going to be owned by the entity which is going to touch base on their requirement first. Who is going to do a transaction is something which may not be relevant at some point of time. The second part is why that ownership will lie, because that entity is solving the problem at first instance, and that entity will keep on solving the problem later whenever those things keep on arising. So this is the same example which I gave maybe 30, 40 years before also similar model was existing. The same gentleman used to solve all the problems, used to collect all the premium, used to come to your home every month for recurring deposits, and if maturity is there, he will bring the cash and give it to you. So while your parents may be knowing that it is an LIC policy or it is a post office that the recurring deposits are, but ultimately they are going to service you, right? So you were actually trusting that person. Over here, you are trusting the brand. Profitability. So let's look at profitability part of it. Banks anyways have invested a lot of money, and they will keep on investing a lot of money in terms of regulatory requirement, in terms of infrastructure, in terms of the security part of it, compliances, a lot of money being invested by them. It's a win-win proposition for bank if they offer this as service to the, I would not say only the neobanks, but any organization for that matter. Say, I'm very proud to say I take care of public sector business, but like State Bank, they partnered with Uber to give loan to the drivers who want to buy a car. So this is very profitable both ways. Uber also makes money. State Bank of India also makes money. And they get an automatic reach and a transaction, and they do that particular business to this. And it is good for any fintech or the company or the brand which is front-ending or meeting those requirements of customer, because they don't have to invest on all those requirements of banking license and the infrastructure requirement and the legacy applications to run those banking operations. And they can always retain their customer, offer multiple services to them. So for me, it becomes one touch point as a customer. For the brand, it becomes one platform to offer all the services to one customer. For bank, it becomes a part of, it becomes good for them to take revenue and be part of that particular business, which possibly they would have missed in the competitive environment.
Sure, quite meaningful. Mr. Pandey?
In today's context, as you asked, the customer is owned by a regulated entity. I think you wanted to touch base between fintech and the banks, because this is a very big issue which people are not understanding as of date. It is not complementary. The fintech relationship is complementary, as if you see the overall context of the Reserve Bank of India and all the regulations. And the data, DLP and other issues, that is basically now fintech should understand they are complementary to the BFSI sector. First. Second thing, profitability, I would say direct, indirect. There are three pillars to it, how this is going to impact profitability or the benefit. The first is additional business, incremental business. Certainly there is a case for it. There is no doubt in that. So I need not dwell upon it. The second is, my operating cost is going to reduce, let me tell you, in this. So certainly, though I am not going to gain directly, but my operating cost is getting reduced. So if I am becoming compliant, then my operating profit is going in and I am becoming more profitable. The third important thing, all this may vary from bank to bank, PSB to public sector, foreign bank and all, And the third important thing which I am touch basing is very new thing probably. In every bank, particularly public sector bank, you will see the compliance issues, legacy issues. Mostly 20 to 25 people are involved day in, day out only in compliance. Now, if you build technology and digitalness, now I'm talking not only for a customer, for the internal, because my staff is also my customer. So if I build the technology in the compliance, this is a clue to the fintech companies listening to this. So if you build the compliance, study that where banks are bleeding. If you build the real compliance during the journey itself, and if the banks are freed with this 15-20% people and put them into the monitoring, which is very important now, or the marketing, second M, so certainly it is going to make your productivity. So I believe this is the way I thought.
No, sure, quite meaningful. Neil?
If I was to take a step back and look at banking license per se, right? The non-banking player does not have a banking license, and hence, if you are owning a banking license, there is an emphasis for the bank to ensure that the KYC, the compliance, the credit risk, and the security and fiduciary duties are taken care of. So at a fundamental level, the bank cannot give that away. That has to be within the banking entity. First point. The way I would want to pivot your question is, if customer is managed, how do you manage the relationship? Okay, and that boils down to data, right? And when you boil it down to data, because from a non-banking entity, you are going to look at data and say, what are some of the services and how is the engagement scores of the customer based on the data that I have? And that's where the engagement generally goes back to the non-banking entity. But the ownership of customer and the fiduciary duties and the licensing requirements mean that bank has to own it, right?
Okay, sure. I think A lot of learnings for me, for sure. I'm sure the audience also must have got a lot of different perspective. But my small submission here on the customer acquisition is maybe a year or two back, I managed to interview somebody from Monetary Authority of Singapore. And he says the biggest worry that we have as a regulator is even if we regulate the fintechs or the big techs, even in future, the biggest challenge is, how to control them because the kind of and the number of customers which they have. So for example, give me an example that the Grab, which is one of the biggest startup in Singapore, has large number of customers than any bank in Singapore. So who owns the customer will always, remain a question. And I think it's a very challenging debate. Maybe we can have one more round of conversation a little later in our next conclave or something. But before I wrap up, let me take, 2 more minutes and maybe you can give me 10, 15 seconds from and quickly answer maybe in few words. Considering the major transformations happening in banking, we are talking about BaaS and all. What is the next big thing that you see in the banking, maybe in next 2 to 3 years? As quick as possible. I will start with you, Neil.
From my perspective, it would be the AI. AI has progressed to a point where it has very high amount of utility, and hence some of the things which we have been expecting people to do, the AI can do that. So that's my number one choice.
Sure. Mr. Pandey?
Collaborations first and going deep diving, AI ML because you have to work on exceptions.
Sure. Ranish?
I go with him, collaboration.
Okay. Rajesh?
Payments on social messaging platforms. That's my pick.
Okay. Mr. Sharma?
I would say platforms. Banks will become more of platforms, and you will see a lot of invisible layer of banking embedded everywhere.
Okay. Noted your points. I'm glad nobody spoke about cryptocurrency or nobody said that cryptocurrency will be one of the biggest thing. But great. Thank you so much for sharing really meaningful thoughts here. Quite a new learning for me, must say. And thank you so much for listening to us very patiently and attentively. Thank you so much.